Hello and welcome to My Finance Teacher. Today is 24th of February 2018 and we're going to talk about gold going out several weeks. Let's see what's likely to happen to gold price over this medium term. First of all though, I want to have a look at the chart of the US dollar index, which is in front of you at the moment. At the moment, dollar is trending upwards for the last several days. In the medium term though, it's at this top level of the downtrending channel that the dollar has been in since early November. So there is a chance, I think, that dollar has finished with its intermediate cycle that has been going on since early September, and that is illustrated by this arc. If the dollar has finished with this intermediate cycle and is ready to start a new cycle, if it's ready to enter an advancing phase of a new cycle, then we'll see dollar strengthening for another several weeks, possibly going out until at least the FOMC meeting on the 21st of March. And I think it is a likely outcome because the RSI levels have reached oversold several days ago, a couple of weeks ago. So there is a high probability, I would give it probably say 60% chance that dollar is finished with this intermediate cycle and is ready to start a new one. It's ready to strengthen for several weeks. Besides, this intermediate cycle has been going on for just over 5 months. Usually they last for about half a year, so it's sort of in the time range for this cycle to finish. Alternatively though, if dollar is rejected by this resistance zone at the 50-day moving average, say over the next couple of days, say early next week, dollar continues up, rejected by this resistance zone at 50-day moving average, and trends down for another few weeks, then this is a less likely scenario though, but it is possible. I guess I would give it a 40% chance that dollar continues down into the FOMC meeting on the 21st of March, as we said, and since the rate hike is likely, that might help dollar strengthen after that, giving us an intermediate cycle lasting from the beginning of September until second half of March. And in that case, this less likely scenario might imply a different path for gold price. So now let's have a look at gold. So with a more likely scenario, if dollar continues to strengthen, entering a new intermediate cycle, then gold is most likely to decline over the next several weeks, going into this most likely going into this FOMC meeting, and that of course will give us short intermediate cycle in gold. So we've started in the beginning of December and we would end near the end of March. That would give us just under 4 months, I guess. It's a little bit short for an intermediate cycle in gold, but it is a possibility. And since dollar looks like it is ready to enter a new daily cycle and an advancing phase of its intermediate cycle, I guess this is a more likely scenario for gold to take as well. So I would give it a 60% chance that gold is going to break through this 50-day moving average and continue downwards. Where are we going to finish the intermediate cycle in gold? Well, a possible support zone is somewhere around these two previous lows. That's close to 1260. And alternatively, if in a less likely scenario dollar continues to decline for another several weeks, then we might see this pop in gold up, which will probably take us just over this previous top. It might take us anywhere between 1380 and 1390. However, I don't think this will be a long-lasting increase in gold price, as usually before the FOMC meetings, when a rate hike is expected, gold is losing positions. So this daily cycle in gold, which has started in the beginning of February, in this less likely scenario, will probably finish sometime in the second half of March, just before the FOMC or around that time. Then we'll be ready to start another intermediate daily cycle, create a lower low. Usually intermediate cycles finish with daily cycles giving us a lower low, probably somewhere around 1280 or 1260. As you guess, I would give this scenario, say, about 40% chance. I think it's more likely that gold is going to continue downwards and give us a short intermediate cycle and enter an advancing phase of a new intermediate cycle around the time of the FOMC meeting, because if we look over the last couple of years, whenever rate hike is announced, that has actually been quite good for gold. And if you search online at the moment, a rate hike is pretty much expected. So that's my outlook for gold and the US dollar. For more details, subscribe to the YouTube channel and follow me on Steemit. I wish you luck in your trades, and thank you for your attention.